If you watched last week's Silicon Valley Snapshot, you'll know that in certain parts of the Bay Area, we're starting to experience a bit of a cool down in the marketplace. And in today's video, I'm going to be going over historical data to show exactly what's going on in real time and figure out whether or not this is an anomaly or something that we've seen before. Coming up on this Silicon Valley Snapshot. I think that we can all agree that history tends to repeat itself, but right now, history is repeating itself kind of, but not really. And I'm going to go over what that means in a second. But before we get into the data, before we get into all of those numbers, if you're a home buyer in today's marketplace and you're trying to figure out, is now the right time for me to buy? And if so, is there a comprehensive data set that I can use to help me with my home buying decision making? The answer is yes. When you text the word data plus the area or the zip code or the neighborhood that you're looking in, and we will get that information sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to understand what the right pricing strategy is for your home, you can text the word data plus your property address to the number down below, and we will get that information sent straight to your inbox. When we think about really strong markets in recent memory here in the Bay Area housing market, two particular years stand out to me. And those years would be 2018, especially at the beginning of 2018, and really all of 2017 leading into 2018 was a really strong year. And after the pandemic hit in 2020, we had a run for a while after the initial craze, like the first couple of months. We started in the summer to experience a bit of an uptick. And I want to look at those two specific time frames, periods of time, and compare what happened back then to what is happening right now, both in Santa Clara County, as well as the East Bay, which is Alameda County and Contra Costa counties combined. And as we look at this data, we're going to see that there are some trends, but not as many as I would have expected or anticipated. And in fact, in a lot of ways, we are bucking the trend, either in a positive or in a not so positive way, just depending on which area that we're looking in. And so let's get into that data right now. First of all, just to revisit where we are right now in Santa Clara County, in July, we had 845 homes pending, 802 homes active on the market. Now, pendings outpacing supply. This is something that we have seen consistently in Santa Clara County over the years. And when that happens, typically we have a really, really hot seller's market. And I would say right now, having team members writing offers every single week, seeing what's going on in the marketplace in real time, I can attest to the fact that the market conditions are very, very strong, especially for the summertime, because typically in the summer, we don't see this kind of activity. We don't see pendings outpacing supply usually during this time. In fact, when we look back at 2018, we see that it was around the June timeframe that we started to see inventory climb and pending sales decline. Now, a couple things to keep in mind here. Look at the inventory levels in 2018 versus where we're at right now. In July of 2018, we had 649 homes active on the market. Now, that was not as good of a market as we're in right now. And that was the turning point of the market. And we started to see the market conditions softened over the course of a 3-month period. And it started really in June of 2018. But we are not seeing that right now in Santa Clara County. And so there is no evidence to indicate that we are going to be entering a period of softening in the Santa Clara County market just based on what we're seeing right now versus what we saw in 2018 when the market softened starting in the summertime. The leading data has to be there. And right now, the lead metrics simply are not there to support anyone who is saying that the market conditions are going to soften in Santa Clara County anytime soon. The data is very clear. Now, let's look at 2017. So that data is right here as well. We see that in July of 2017, which was a very, very strong seller's market, we had 1,334 homes pending and 1,050 homes active on the marketplace. So definitely we had a better market in the summer of 2017, just in terms of how many more pendings we had versus supply. And so that delta was greater in 2017. So are we in the best market that we've ever seen in Silicon Valley? Absolutely not. By no means are we in the best market that we've ever seen, but we are very clearly still in a seller's market, and there is no data to support or evidence to suggest that we are going to be experiencing anything different in the short term. Now, it's also relevant to note that inventory levels are down 20% where they were in July of 2017. That is not insignificant, especially when you think about how low inventory was back then. I mean, we had everyone talking about how there were no homes on the market in 2017. And here we are 6 years later in a situation where there is 20% less homes than that what was presumably a very, very low inventory market, which plays into the narrative that I've been talking about for a very long time now over the last couple of months, which is the story isn't demand. The story isn't interest rates. Interest rates are going to do what interest rates are going to do. But as long as inventory levels remain where they're at right now, then there is really nothing that is going to keep the market from staying a seller's market. The supply is just too low. Period. Now let's look at 2020 because it's also interesting to note what happened in 2020 and comparing it to what happened right now. Well, first of all, let's just look at the disaster that was 2019. We had 2,000 homes on the market and 1,200 homes pending. Now, keep in mind, when I was selling in 2019, homes were still selling. It's not like buyers were just squeezing sellers left and right. No, in fact, in a lot of areas in Santa Clara County, we still had multiple offers, especially on the best homes. So the best homes on the best streets with the most upgraded fixtures and gizmos and gadgets and all that good stuff, those houses in 2019, even in that market, were still receiving multiple offers. Now, were they going crazy dollar amounts over list price? Absolutely not. But the point remains that even in that market, which is very different than the one that we're seeing right now, there were still situations in which the sellers were in the driver's seat. Now, every situation was like that. I had plenty of listings in that time frame that didn't sell in a week or two. It took us a month, 2 months, 3 months to sell in that moment. But that's a traditional market. And that's definitely way more traditional than the one that we're experiencing right now. We have to go through several iterations of market to unlock what many people would consider a buyer's market here in Santa Clara County, because we're in a seller's market right now. We'd have to go through several iterations of a more stable market, which in 2019, this is data that shows us what a stable market looks like, because that's exactly what I would classify that market in 2019 being. We'd have to completely surpass that and then go to the next level where we really truly classify it as a buyer's market. So lots of runway still left for this market. We're not going to experience dramatic losses in seller equity. There's just too many phases of market left before we would unlock what many people would consider a buyer's market. And let's look at 2020. So 2020 was COVID, and the summertime in 2020 was when the market really started heating back up again. And if we look in July of 2020, we had 1,500 homes active on the market and 1,387 homes pending. So we had pretty much double the amount of homes active on the market at that point. And of course, demand was keeping up. So rates were low at that time, very low, if you might recall. And so that was definitely propping the market up. But make no mistake here, the inventory levels in 2020 tell you everything that you need to know about where we're at right now. Because in 2020, the inventory levels were considered low at that time. Okay. And in 2019, I wouldn't say that they were considered low. It was definitely average, but 1,500 homes was not a lot of homes. And so if we're in a situation now where we have half the number of homes that we did back then, and the market was doing really well back then it stands to reason that there is no data, there is no evidence to support that the market is starting to correct itself. If you look back about a year ago, the market has already corrected itself, and now we are on the climb back up. And as long as inventory levels stay as low as they are right now, then I don't really see a path to further softening in the market here in Santa Clara County. In fact, looking at all this evidence, what I'm left to conclude here is that aside from 2021, this is really the strongest the market has been in Santa Clara County since 2017. In 2018, 2019, 2020, 2022, the market conditions were way more in the buyer's favor. And so this is about as good of a summer market as we've seen since 2021. And before that, it was 2017. So this is one of the better summer markets. Now, how does that translate into the fall? That remains to be seen. But let's pay attention to the inventory levels specifically here in Santa Clara County, because that will dictate how frothy the market is for home sellers, the ones who choose to sell, and how competitive it is for the buyers that remain in the marketplace. All right, so let's talk East Bay now, specifically Contra Costa and Alameda counties combined. Now, this tells the tale of what is currently going on in the East Bay. We have 1,774 homes active on the market, 1,423 homes pending. So inventory is outpacing demand ever so slightly in the East Bay. Now, that wasn't the case. Earlier this year, we saw inventory or pending activity outpacing supply for many months. And we saw this shift in the market really just in July. And so if you've watched my videos for any period of time, you would know that this was something that I expected, that I predicted was going to happen. What I want to do is look back in previous years, previous summers, and see how we compare to some of the better markets. Let's look at 2017. Summer of 2017, again, if we saw Santa Clara County, it was one of the better times to be a home seller. Not so great of a time to be a home buyer, except for the fact that you had amazing rates at the time. 2,704 homes active on the market, 2,403 homes pending. And that is very similar to the Delta, very similar market conditions to the ones that we're experiencing right now in the East Bay. And if you look, that really translated into great results in the wintertime and early springtime of 2018. Now let's look at 2018 numbers. We had 2,931 homes active on the market, 2,288 homes pending. Something to look at and something to keep in mind here is the same thing that we've been talking about in Santa Clara County is also happening in the East Bay, which is inventory levels are super suppressed. We have 1,000 less homes for sale than we did in the summer of 2017, which was a very low inventory market, as we've just seen in Santa Clara County. And so stands to reason that with such low inventory levels, we would expect prices to be upheld, or we would expect prices to stay consistent where they're at right now, as long as inventory levels stay where they're at. But here's where it gets interesting, and this is what I want us to pay attention to, is that in 2017 going into 2018, we know what happened in 2018. The market went white hot. And from 2018 to 2019, something different happened. And so what I want us to pay attention to is what the trends were in August and September of 2017 and 2018. So let's look at 2017 real quick. We had a decrease in inventory levels from July to August versus July to August of 2018. We saw inventory levels increase. And so what happens here in August, I think, will play a critical role in what happens in the East Bay here in the fall, winter, and next spring as well. It's not unusual to see inventory levels increase in the summertime. Case in point, look at 2017. Case in point, look at 2018. We are accustomed to seeing a spike in July. What dictates the results later on in the year is what happens after the summer. So August into September. And this is something that we need to pay attention to leading into Labor Day and then post Labor Day, looking back at August and seeing what is happening in the marketplace to figure out the trajectory of the East Bay market, because it's pretty obvious, I think, what is happening in Santa Clara County. We are seeing market conditions that are very strong, stable for sellers in Santa Clara County leading into the fall. I don't think that that's going to change unless something dramatic or drastic happens, but things in the East Bay are a little bit more volatile. And so it's something that we want to pay attention to. Let's pay attention to the inventory levels, see what happens, because if they go down from July to August, I think it's pretty safe to say that we're going to see sellers continue to benefit from tight inventory levels. But if inventory levels continue to creep up, then this could put pressure on prices, at least for prices to stabilize. I don't know if prices are necessarily going to go down. The delta between inventory levels and demand at this point simply isn't large enough. We'd have to see inventory levels creep up dramatically over the next 3 months, and we'd have to see demand wane and fall off over the next 3 months for us to really see any impact on housing prices. But it will absolutely impact the conditions of the market, and it will impact the competitiveness of the market in the fall. I also want to call attention to what happened in the East Bay in 2020. In July of 2020, we had 2,200 homes active on the market, 2,844 homes pending in July of 2020. Now, pendings were outpacing supply dramatically at that point in time. And it's interesting to note the differing market conditions in Santa Clara County versus the East Bay. And this is something that I want us to also pay attention to heading into the fall of 2023. And that is this, that typically we see this ebb and flow between Santa Clara County, San Mateo, and the East Bay. So all four counties really play into one another. There's this ebb and flow of demand, especially demand. And that is because when one area gets too hot, buyers start to migrate to other areas here in the Bay Area. And so what you see here in July going into August of 2020 is exactly that. Look at what happened to pendings from July to August. So we see pendings decrease from 2,844 to 2,697. Now, that is not a huge amount, but it is something to note that when market conditions get too hot in one specific area and the entire marketplace isn't too hot, meaning if the marketplace as a whole isn't super saturated. So in 2020, Santa Clara County, we had inventory outpacing demand, contrary to what was happening in the East Bay. And as a result, we see East Bay buyers saying, screw this, I'm not going to compete here. I'm just going to go back and try and compete for a home in Santa Clara County, where the schools are just, go to an area where the schools are comparable and the price per square foot is roughly comparable, although it is slightly cheaper in the East Bay in many parts. But let's go find something in a less competitive market. And this ebb and flow is something that we see constantly here in the Bay Area. So let's see what happens as well to pendings in Santa Clara County versus the East Bay over the next couple of months. Because if Santa Clara County continues to stay hotter than the East Bay and we see the East Bay start to soften, we could see some demand from Santa Clara County drift over to the East Bay and start eating up some of that additional inventory if inventory levels continue to rise in the East Bay. Lots of trends to pay attention to, and you do not want to miss a second of it. So if you are not already subscribed to this channel, what are you waiting for? Click the subscribe button, hit the notification bell to get notified every single time a new Silicon Valley snapshot gets posted. That's it for this video, everyone. I'm Danny Gould. I'm selling Silicon Valley, and I will catch all of you in the next video.